Welcome back. It's time for the Word on Wall Street. Top investors watching your money. Joining me right now is UBS Private Wealth Management Financial Advisor Sarah Ponchak. Also with me is Rebecca Walser. Great to see you, Sarah. Thanks for joining the conversation. We want to take a look at futures this morning on a busy day of third quarter earnings. Wow, we are looking at an earnings-driven rally, Sarah. That's what you want to see with a rally, right? Based on fundamentals, you got General Motors, 3M, Verizon, Coca-Cola, all reporting a double beat. GE and Coke both raising guidance. GE stock has impressed me this morning. It's up 5.25%. And then, of course, after the bell, we're getting Microsoft and Alphabet. Tomorrow we'll get Meta, and Thursday we'll get Amazon, Sarah. What are your expectations and reactions to what you've seen so far?
You're right, Maria. That is exactly what we want to see. Much of this year's trading has been driven or predicated on interest rates. Even though they have continued to move higher, that's where investors' mindset has been really focused. But when you look behind the curtains, it's great to see strong fundamentals. After all, this is going to be a crucial week for earnings. About 40% of the S&P 500 in terms of market cap is reporting, and in large part that is because we are seeing many of those magnificent 7 large cap tech stocks reporting earnings. So if we look at these past 3 quarters, we have seen 3 straight quarters of year-over-year declines in corporate profits for the S&P 500, but we do expect this quarter to be that turn. We're going to see profits return, and in large part that will be driven by earnings from many of these large cap tech names. We're expecting about 30% earnings growth from these 7 large cap names. So not only have they been driving the rally for the majority of this year, but they've also been driving the earnings growth as well.
Yeah, it's a great point. And with GE, we got $84 million in earnings after a loss of $313 million a year ago. With Microsoft, we're looking at the first quarter for Microsoft, and the preview is talking much when you look at analyst reports this morning on Microsoft. They're talking about AI. Sarah, that's supposed to be the big driver when they're talking about what takes growth higher in the next quarter.
You're right. AI has been a buzzword all year long in 2023, but the reality is that AI is not just a buzzword. It is reality. It's happening in front of our eyes, and it is important if you're an investor to make sure that you have a piece of your portfolio that is latched on to the future growth, the future profits that we are going to see for these companies that are at the forefront of the change, because it's going to be a huge moneymaker. So yes, when we hear from these companies, we want to hear about their AI rollouts. What are they doing? Are they making money from it already? What do they expect in the future? And also CapEx trends in the space.
Well, look, they reported a sequential decline in the Azure growth. Azure is their AI unit there, the cloud business, and analysts are expecting that company to turn around the Azure growth in the fourth quarter, to turn around in this quarter. So we'll be watching that. Microsoft expected to report $54.5 billion in revenue. That stock is up year to date. So these stocks have been seeing some pretty good moves, GE and all the tech names in the last several months. Rebecca, I want to get your take on whether that's sustainable, especially with the costs of oil, the costs of higher rates. Oil prices are rebounding this morning. Investors are on edge, of course, with the Israel-Hamas war. Is that going to disrupt supply exports, Rebecca? Oil right now at $85.89. Down from the $90 barrel we saw earlier in the week and last week, but still, this is an elevated price. Rebecca, your thoughts?
Yeah, I think so, Maria. You know, Biden last week announced the ending of the sanctions on Venezuela, an OPEC nation, and we are expecting, not immediately, but that would ease anywhere from 200 to 300,000 barrels a day, and that would help. And so you're seeing that help a little bit. But honestly, I still think that we've got a more oil shock pricing ahead, because when you've got a war going on in the Middle East, which is literally the center of the world for oil concentration, you know, you're going to have more price volatility here. And really, oil, you know, Maria, we've had in the first 3 quarters, we've had $75 billion of acquisitions or mergers announced. And so that's really the name of the game. They're looking, these oil companies, North American oil companies, are looking for ways to continue to give investors growth amid high rates, amid higher cost of capital, amid global slowdown of, you know, manufacturing orders, which obviously affects global demand for crude. So all of these things together are going to allow us to know that oil is still going to be volatile for the rest of this year.
By the way, Microsoft, in terms of its AI, it made a massive investment in ChatGPT. So that's really the AI business. It invested $10 billion in ChatGPT developer OpenAI and unveiled AI-enhanced versions of its Bing search engine. So you've got that we'll probably hear about tonight when they report, as well as the cloud business, as I mentioned earlier, Azure. Rebecca, when you look at this tech layout and these stocks that have traded up so much all year, would you put new money to work here?
Well, it's hard. Microsoft is up over 36% year to date, right? And so that is really difficult to say, oh, let's go and buy when it seems like it's
now.
Yeah, exactly. It's 36% from start to now, and that's a large. But, you know, Maria, ChatGPT, man, they have such a runway on that thing, and they are going to be in the leading position for a long, long time. It's going to take the others a long time to catch up because already this is being implemented globally. So many people have got this on their phone as an app. And so that is the beginning of it. And people are starting to accept it in their daily lives, writing emails, writing their text messages with ChatGPT. This is happening.
Yeah, and I would also add that it's good to see a little broadening out, Sarah, today with the industrials getting in on the rally, right? I mean, GE is up, 3M is up. We've got some guidance that's better than expected. That's a positive because it's been all about this narrow rally in tech. To see this broadening out of industrials has to be good for any expectations that this rally has legs.
Yes, we need to see some broadening out. It's been the story all year long that it's only a handful of names leading the rally. You just look at the market cap weighted S&P 500, which is, you know, the normal index everyone tracks, versus the equal weight version. The dispersion, the spread that we have seen all year long is a historic one. So it's great to see cyclical sectors joining in on the rally. And many experts will say that is precisely what we need to see in order to see this next leg of the market rally.
Right. All right, ladies. Great word on Wall Street. Good to see you both. Sarah Ponchak, thank you for joining us. Rebecca, you're with us all morning, and we're grateful. Thank you so much, ladies. We will be right back.